Okay, good morning and welcome to the early bird. And here we're looking at the Dow Jones, the CFD on a 1 hour chart, and we've had a little bit of a rally through here. It doesn't seem very much in the sort of scheme of things coming down through here. It was sort of partly based on the ADP figures, which are sort of private employment figures coming out. And I mentioned this sort of yesterday in the early bird in the text side of things. And one of the good news about having that on the Wednesday is that it can be a bit of a forecast for the employment figures coming out on Friday. The ADP figures were slightly mixed. They were down in manufacturing and up in the services sector, but I put it under the Dow Jones section there, so you can have a bit of a read about that. It doesn't always affect what happens on the Friday figures, but it certainly has a sort of a strong sort of influence on that, and so that sort of little positive thing for Friday sort of being there is helpful in a way because also with this wave structure coming down through here as well, it seems to be sort of complete in terms that we were looking for 5 waves in terms of 1, 2, and then the third wave here had 5 waves in it, the extension in that, down for the third, and then back for the fourth, and then down for the fifth. Now, this is probably a little bit debatable if this is finished or not, and there certainly could be another pull down through here, because I've just taken this off just to go over this and show you where the mistakes. This doesn't have the right look about it, this particular structure here, in that I've counted that as down for wave 1 and that for wave 2, this down for wave 3, and then this for wave 4, and then wave 5 is 1, 2, 3, 4, 5. So anybody that studies Elliott a little bit would say that, well, this fifth wave here is rather large compared to the small first wave here, and I grant you that, and that's why that this low here could be just the low of the third wave from this section here, and this is more obvious in the FTSE actually. So with the FTSE there does appear to be a rally, then another fifth wave down, so that's sort of on the cards as well. But for the time being, let's consider that there is support coming in here, and as you can see in this section here, you can see there's a fair bit of volume coming in here on this low here, in compared to these bunches here. Yeah, so there is that. There is that factor there, so we'll be paying close attention to that. What we can also say as well is that 12,000 is a strong, the largest, closest number, put it that way. So it's natural for this market, based off the 11,772 as I call it, and the 11,8, the first minor level, to retest the 12,000 from here, and that's what we'll be sort of looking at. And we'll also be looking at the volume that comes in there, and also the small wave count that comes in here as well. Yesterday, as you know, that that little dotted line there, we're drawing that down to finish the fifth wave down to here. So, we could be on track here. We just got to kind of see. It doesn't mean that we, should go in and buy on the low and pick in the low, because that's just dangerous. Of course, intraday traders would certainly use the 11,800 and the sub levels there, and that would also be the same for the S&P 500. Now, the S&P 500, the first thing that springs to mind is this dotted line coming through here, which is pretty much the low of that large triangle that we were working with. So that's what we were looking for. We were looking for a 5-wave structure down, in terms of down for 1, back for 2, and then 5 waves down here for the third wave, third of the third, and down for the third here, the fourth, and then 5 waves down through here. Once again, the wave 1 here being a bit small, so a bit dodgy on that one. So if there was a mistake made here, then it would be that from this move here, this move down here would be wave 1, this would be wave 2, this would be wave 3 here, wave 4 would pull back to the fourth wave of 1 lesser degree, which would be this guy here, and then would see another wave come down through here. And once that comes into there, then we'll see a retest of that trend line there. So look, we're just sort of mucking around and, looking, sort of studying it and looking at it. And they're the sort of conclusions that we've come with. Now, we wouldn't be sort of long-term bullish unless this market had found support above the 1300 there, because that's the closest, largest number. And we've got the this number here that will come into play, the 1272 here. Even though it didn't have much sort of pull within here, it certainly will over here. So this is all subgroup 2 area here. The 65, 72 and the 80 here as a little group here. So we'll see that market play out there, and also on this trend line as well. So we could say here that this is quite an important situation here on the 1250 here. So this 1250 coming through here as support here, and what we're trying to sort of establish would be a 5-wave structure moving up through there, and we've kind of got one, but it's diminishing in its structure in terms of 1, 2, 3, 4 and 5, and yes, that can just be the third wave there too, in terms of up for 1 here, back for 2 here, up for 3, back for 4 and up for 5. I haven't pulled that apart to give you a thing there, but I could say that this market will hit 60, 65 here, come back and check into this whole region here before it sort of pushes off. So look, as long as generally speaking it stays above that 1250 there, then we have a sort of a positive situation that that we could stay with, a breaking of that, and then we would be looking for the further downside there. And this is the same with the UK market, but in the UK market here, it's a bit more sort of obvious that there is a fourth wave here and a fifth wave here based on from this move down through here. Excuse me, it would be looking at down for 1, back for 2, down for 3, back for 4 and down for 5. So that little dude should be over here, and then we'd see an A and a B and a C back up here for wave 2, and then wave 3 coming down has got 5 clear waves here in terms of 1, 2, 3, 4, 5 for the third here. So there's many times that I've used the FTSE to try and get the wave count on the other markets. So I think that this does carry some strength here. This, as in the S&P 500, that dotted line, this is the dotted line running through here as the large triangle pattern that we've seen on the daily. So we could certainly see this fourth wave and this fifth wave through here. So we're still tinkering with this current low here, and the little rally last night is really quite small and insignificant in terms of what we're actually seeing here. And just before we get on to our markets, if I could point out a few things here in terms of strength here. This is the Chinese market, the Shenzhen, and the Shanghai is the same as well on a daily chart. Here you can see that yesterday didn't really sort of bother the Asian markets what was occurring, and this move up here that we were looking for, because we were in the bullish picture, we were looking for sort of 5 waves up through here, and then 3 waves coming back in through here, coming back here, and then moving up from that point there. So that's really quite strong in China there, and the Shanghai market that we look at pretty much the same as well in terms of its market. But you can see that it's actually come down further here, but yesterday wasn't affected by what sort of happened. So it hasn't taken out these lows here. So it's still quite sort of strong there. This 272 here would be a dividing line on being weak and being strong, so we can use that for the short term. So while it's under that level, we will consider it weak, but we can also see that it hasn't created new lows down here and destroyed this positive structure here. So anyway, we'll see how that goes. But what I wanted to talk about was more so in our market. So we've had this strong move down here yesterday. And we've had this strong volume bar here as well, a reasonable amount of volume coming in through here to the downside. Now, if we see a move, well, we'll see a move today. First of all, we'll see, and it's just natural to see a bounce off the 4,300 here as the first minor level. So we'll see the price open up around the closing here. The futures market went down here and then has come back up, and we'll look at that in a moment. But this move here with this strong volume here, if we see a move up today and maybe even tomorrow, whatever, if we see moves up there on lower volume, closing higher, but on lower volume here, then it's weak. It's a little bit like you see that move there, how it went up there, and we got lower volume here. I'll just put this onto a crosshair here on the cursor so we can have a look here. Just a subtle but important point. So we can see that that move went up there as a retest to the 4.5 there, but it was on lower volume. So we know that that's the volume confirming the price action, basically. So it's confirming what we're sort of seeing in a sense. I thought just as an example here, I thought the March lows here was a good one to look at. So we've seen a nice strong trend come down, and we've seen this move come down through here. Then we had that move up through there, and you see how that's on stronger volume here. That volume bar is higher than that one. Simple as that. Okay. Then even though this market came down and closed back up here, it was on higher volume. Then this one was on higher volume. So that's the kind of picture, in here that we would want to see over where we are now. Okay, so that will give you some sort of real proof in the pudding kind of stuff to see what's sort of going on here. And that's what we'll use. But once again, we've also been counting 5 waves down through here as well. So I'm just putting this cursor back onto the little arrow here. So what we've been looking at through here is that we'll have been looking at 5 waves in terms of down for 1, back for 2, down for 3, back for 4, and down for 5 as a 5-wave structure. That could be counted differently as well in terms of down for 1, back for 2, down for 1, back for 2, and then the third wave coming in through here. But let's just have a look at that in terms of the intraday story on our market. This would be, first of all, this would be the SPY here. So the SPY is the cash market sort of closed up here yesterday, and will open around here as well because the SPY has come back up through here. But yes, we just first of all, we'll look at this 4th wave here, and we're looking for 5 waves down through here. I'll just run through this just to give a bit of sort of insight on the Elliott situation. So first of all, we've got wave 1 down to this point here. So if you remember that, then an ABC for wave 2 there. And then we've got the wave 3 all the way down to this spiky bit here, then wave 4 to here, or even to here, and then wave 5 to come down through here. So wave 1 coming down would have 5 waves coming into this point or that point. Wave 2, wave 3 would be to here. That nice strong gapping in the middle there really sort of concretes the 3rd wave. So we got wave 3 in here, which would be 1, 2, 3, 4, 5 down to here, and 5 waves in here. Then there'll be wave 4 and then wave 5 to here. So that's 5 waves to there. So 1, 2, 3, 4, and 5, and then an ABC coming back up for wave 2. Then wave 3, as I mentioned, is all the way down to this point here, and wave 3 is normally the longest and the strongest, and it will have 5 waves in it as well. So we would see something like 5 waves down to this point here. So the first 5 waves you can see in there to that point there. So there would be the 1, the 2, the 3, the 4, and the 5 to 1, 2, 3, 4, 5, 5. Got my own thing in a knot here. Yeah, to there. And then we'd see wave 2 back, and then we'd see 1, 2, 3, 4, 5 to here. So that would just be the third wave, the fourth wave being complicated through here, and then the fifth wave coming down through here for that. So this particular move that we're seeing here, if we can just if I can just put this on a bigger picture, let me have a look if I've got just have a look at bear with me for a second. Right, okay, so this is kind of what we were counting just then through here. So this would be the bigger picture here in terms of the 1, the 2, the 3, and the 4 here. And I mentioned the other day that the 4 is a little bit too high, but it doesn't break any rules by going into the price territory of wave 1 there. So it just gets away with it a little bit. So this is sort of what we're looking at here in terms of the cash market here. And you know, we can see that it's just made its first little sort of efforts up here. This will be the cash market here. So it really needs to sort of develop that support on this area here. But just to give you that sort of look and feel of it at this point here, this will be. So we've got this 4, 5 down to here. So this move up through here, we need to work out if it's corrective or it's going to be a positive structure. So there's a couple of ways we can work with it here. This is talking about the actual cash market now, not so much the futures market, because the futures market is still under the 4-3 here. So the 4-3 would have to come support here, but this one's more in front here. So we'd be looking at 43.10, 43.20, and 43.30. So we need to find support on that 43.30 there. So that's what you'd be looking at today. So that sort of development on there, and then the next level would be the 43.50. So let's check out what happens here, what the wave structure is here, and what sort of volume comes in. They will be the 3 points that we'll be looking at today. Now, the fear factor is that gold is pushing higher. And this is the other medium level here at 1650. So I would assume that it would take some sort of pattern like this here. This was what I call an overshoot pattern, where the market doesn't stop at the level here. There's only two basic sort of patterns that it can do at a level, and this is one of them here. I just call it the overshoot, where it just overshoots the thing here, but the distance it goes above is normally the distance that comes below. And then it works into the 1650 as the balance point through here. So this is the likely scenario, what will occur here. But while the US debt grows, then we can just simply expect gold to grow as well. So that would be a simple way of looking at that. The oil market's following stock, and it's just continually moving down through here. And as I've mentioned before, that we would have to, a couple of things here, is that going into minor group 1 here, the 91, 92, and 93, will slow the price down, and we'll see a bounce off the 90 here. We can also see stronger bounces through here now that stock is finding a bit of support as well. So oil would want to see what sort of support's coming in there first. The idea, if you've been trading this market short here, the longer term traders have got two choices here, as we mentioned before, is to take profit at 93, 92, and 91, and then just wait for 90 to become the resistance and then move back in on the short side. The other way to do this is simply, which is more risky, is just trade straight through this and accommodate any bounces and any move back over the 95, and you have to be out. Simple as that. The copper market is moving down as we expected it to do, down to the 430 here, and a little bit of sort of subtle support coming through here, as we noticed yesterday. So if this price by any way takes out the top of this wave structure here, then we'll have an overlapping wave structure, and then it would make this wave here corrective. While this is coming down through here, we're going to see our Australian dollar weaker, being a commodity dollar, and we're also going to see our material sector weaker as well. So I just want to point out the material sector here for our local market here, because it does have a 50%, if not more, impact on the situation. So here's our material sector. Here's our main level through there. I'll just take those off there. So this is our main level, the 13,000, and that's a medium level, and that's a medium level there. So I guess what I'm pointing out here is that if the 13,000 becomes the resistance, yeah, it's in a bearish, it's in a bearish mode for that. If I was trading long here, as long as this market stayed above the 13,000 there, I'd consider it positive. If this was a $13 stock here, and I was trading long in this $13, this would be the line in the sand that I would have to exit here. So even though that we can see a nice sort of 5 waves up through here, as I mentioned before, that 5 waves can be part of a C wave, where we have down for 1, back for 2, down for 3, back for 4, and down for 5. So that's down for wave 1. And then we've got an A and a B and a C for the A wave, 3 waves down for the B wave, and 5 waves up for the C wave here. So basically we can have down for 1, A, B, C for wave 2 as a flat correction, and then we would see the beginnings of a 3rd wave coming down. And in that wave structure coming down, we would be looking for something like this. We would be looking for 5 waves down, 3 waves back up, and then another 5 down through here as such. So we just need to be aware of what's happening around this section here. And this is something that, see, the commodity is always the last to top out in a cycle, and it's the banks that lead the way. So when we have a look at our banking sector, just going back over its main level, the 5,000 of how it dealt with things through here, it was much the same. So we can see that the 5,000 through here had a different scenario here, but it had the same sort of old bottoms and the same situation through here. So you can see that, this is gap down, it was lingering down through here. And, it normally moves down to the first minor level down through here. So that would be the same with the XMJ at 12,800. This is 4,800 here. So I remember mapping this out. It was just all basic sort of stuff, really. Comes down through here, retests the closest largest number, and then moves, works its way lower. So this is a real possibility of what can happen to the material sector. And of course, the constituents in that sector would be, the BHPs and the Rios and the so forth. So it's here. So we're going to get a very short term, we're going to get a bouncing and all that sort of through here. But we need to make our mind up after that to see if it really sort of locks under here and bounces down. And if it does that, then it'll do this, and then it'll do this. So that's what we sort of need to, it's good having this picture here, because it can it's just it's a possible path that we could look at, and it's helpful because that means we don't freak out why it's jumping around here, and when it comes to here and find support, we can expect it to go back to here. Do you know what I mean? And we can expect it to test supply here, sellers here, people that bought here before. Yeah, it's just a process, and it's worth sort of understanding. And this will be the same with stock that we're trading as well, because we're short in a lot of stock, and I do see those stocks have further to go to the downside. We just need to get past this little 5 wave structure that we're sort of seeing within here. Okay, the US dollar index. I guess the thing here is that, I mentioned before that if this market finds support above the 75 here, then we're going to have a very positive US dollar here. If the Dow Jones and the S&P 500 continue to the downside and break down and break lower, then this also going to push this market up here as well. So be aware of that. In this short term here, this after this sort of wave coming down through here, this has got overlapping wave structures within this structure here, so it's likely this will push down through here. While this pushes down through here, then we're going to see the euro push to the upside through here, and we're sort of seeing that through here. So the support on the 143 here would be important, and I've left this trend line in here because that's normally the case. It would come back up and retest that. So looking at that on a smaller view here, we can see the euro here on the 143 here coming up. We can see that it's got this A, B, and C correction through here. It's come up and it's sitting on here quite nicely now as support, isn't it? Not to say that it won't break through down here, but the main story here is that if this price finds support on top of subgroup 1, because that's 43, that would be 10, 20, and 30, and the story is that if this finds support on top of subgroup 1 here, then it frees itself from this here, from the closest largest number. We can see here that it tried to get up there before, but it couldn't find support. So the breakout, sure, the breakout's important, it's part of the process, but it's not as important as the retest. So the retest is more important in finding support, and that will go through this time again. So if that pushes up through there, I kind of would expect it to go up there this time. Gann does a good thing on this as well. He says that the fourth time that, and I would class those two together there, the fourth time, this is 3 times, the fourth time that a market tests the high is when it will break through. So Gann's the man on that one. So we'll see how we go with that. But as from a trading point of view, support on that top of subgroup 1 there is what you want, and then that will deliver the price to the 350 there. And probably much higher, because we could square this up in terms of time here to price going up yonder there. The Australian dollar, I think we need to sort of have a look at the bigger picture. I think this is just I think this is part of a corrective structure through here, and once complete, we'll see further to the downside. But just bear with me here a second. So from this point here, we'd be looking at down for 1, back for 2, down for 3. We're looking for some A, B, C for the fourth here. That should pull back 6. That's not 61%. It should pull back 38.2% of the third wave. So from there, basically down to there. Put that there. So that's 38 there. So we can look at the 108, and that's what we'd expect as well. We'd expect a retest of the 108 at the 38.2 retracement level, but it also can pull back to the third, fourth wave of 1 lesser degree. So it's that little high just in there. Okay, so it can do that. So see how we go. But the 108 would be the important thing there. The 107.72 here would be very important too to find support on. Now, just before we get to that as well, I just want to point out that this 5-wave structure that we're looking at here may be just part of a larger one in terms of this one here. Yeah, I don't like that either. This is more of an A wave here, so like an A and a B and a C wave coming down to here. But I just want to go back, and I want to go back further. Just sort of bear with me here. Just to look into the larger picture still. as a larger A wave, larger C wave coming down. So at that 1110, would be seeing, I think I'm offline here. While that's loading up here, we'll just have a look at the short term here. So with the Australian dollar here, this 107.72 here, having that as support is really important. But expect a sort of a larger correction to come in through that there. I'm just sort of looking at this structure. This would be sort of a wave 1 here. This would be a wave 2 to this point, a 3 and a 4 here. This would be a wave 5 coming up here. So we could look at this as 1, 2, a third wave to here, a fourth wave and a fifth wave to here, then an ABC correction across this sort of area here. I'll just see if I can put this onto daily. I don't think I can. I might lose the picture here because we're not bringing it up on the previous one here. No, it's not coming up there. But look, that the Australian dollar. Have a look on the on our Forex charts on the 4-hour and daily chart for the Australian dollar there, because we're looking at a much bigger ABC correction, and that bigger ABC correction that we're looking at would actually fit into our stock market price coming down further as well. Okay, I'll leave it at that. But the point is today is essentially looking at our local market, maintaining support on the 4-3. That's not the problem, because we will see a bounce off the 4-3 anyway. The subtle things are finding support on the 4-4-3-0, which would probably be the case for the cash market. The SPY needs to creep up through the 4-3 there, find support on that, and then scale in through there. So the SPY having support on the 4-3 30 would be extremely important, and also the volume that comes in as well today would be very important as well. So we'll be looking at the structure and the volume today in terms of what we'll be looking at. But we're expecting a bounce off the 4-3. We're also expecting some positive figures on Friday, so we can sort of be looking for higher moves in the US indices, and also our market here as well. It's just we don't know if it's going to be a larger impulse wave or a larger ABC correction, and we won't know. But trade the levels and watch the volume, and we'll look at the wave count on those. Alrighty, good morning and good luck.